Catalina here today from my backyard because there's some I'm renovating my bathroom inside my house and there's a bit of noise. So today I'm filming from my backyard where my tiny house is. It's right there. There's some bikes in front of it, electric bikes. Anyways, that tiny house does very well for me. I host an Airbnb. So if you actually Google tiny house Gulfport, Florida, you will see my tiny house. It's available for short-term rentals, although I am renting it out to someone who stayed for 4 days and asked to rent it out for 6 months. I'm letting her do that. And then I save my time from flips as well. But today, that's a whole side note. I did not mean to go on that sidebar. Today, I'm here to talk about tax saving tips for student loan borrowers. So this is a special tax saving tips for student loan borrowers, because there's tons of generic tax saving tips out there for generic public, but I want to talk about this for student loan borrowers, or even for people who may be in school, who are about to come out and have to repay their student loans. What are some of the tax saving tips out there? Okay, so that's what I want to talk about in today's video. So tip number one for tax savings is, but let me just give a little bit of a preview actually before I go into the tips right away. Otherwise the tip may not make sense. For tip one is there is an interest deduction of up to $2,500. I'll go through the details only on interest paid on student loans. So if you have private student loans and have been paying, this is relevant. If you are in the federal loan program and we have been on administrative pause and you have not made payments, then this opportunity is actually not as important to you. But I do want to go through it because in the future, we're going to start paying towards the end of this year. And so this is going to be relevant next year as well. So hang in there if you only have public loans. And then I'm going to go through some other huge tax saving tips. So I'm going to make my screen smaller so I can share the details. Of course, I only take information from reputable sites like the IRS site and studentaid.gov, because that's the most credible information. Okay, so first and foremost, like I said, there's a $2,500 deduction. Studentaid.gov, this site doesn't give us as, I'm just going to lower the volume in case anybody starts to ping me, doesn't give as many details into the deduction. So I'm going to go to our IRS website. It basically says for 2022 that the modified adjusted gross income that a borrower has to have is between $70,000 and $85,000 if you're single, and between $145,000 to $175,000 if you're filing joint with your spouse. Okay, those are the income limits in order to deduct $2,500 of interest. I also want to go through tangibly tip number one, of course, if you have been paying student loan interest, to make sure you claim that deduction. How you claim it now is tip number two. I want to talk about, because it's not just that you claim it. How do you actually claim it, right? How you claim it is your student loan servicer. So if it's Mohila, Nalnet, Navient, Sally Mae, whoever it may be, they're required to give you this form. It's called the Form 1098E. You can download it straight from your servicer's site, and it should be available now. And the most important piece of information is right here, the student loan interest received by lender. That's the amount that you can deduct from your taxes. You will get this form, and then if you file through TurboTax or some self-filing software, they will ask you, you should be prompted, do you have any educational deductions to make? And you should be able to enter. They should ask specifically about the 1098E form, and you should be able to enter box 1, the interest payments you have made this in 2022, so that you can get that deduction. I also want to spend a quick moment talking about if you're in school, there is a tuition statement that the university issues, and that's called a 1098. This is pro tip 3, by the way. If you are in school or considering going back to school, you should know about the 1098T, but I want to bring this up And of course, I have to make a disclosure statement. I'm not an accountant. I'm not a tax professional. I'm not an attorney. So this is just for educational purposes. I probably should have front loaded that statement, but I do use all this advice I'm giving and all this information. I do use it in my personal life. So it is someone who actually uses this information. So I'm not just reading about it, right? I do want to say that statement though, because even though I'm not an accountant, tip number 3 is if you were in school in 2022 and you had any educational expenses, the university should have issued you a 1098-T, which is a tuition statement that gives you credit for educational expenses that you had paid into the university, okay? So I want to talk about that because this also will be triggered in the same TurboTax. I'm talking TurboTax specifically, but any other software, I don't know. I'm just most familiar with TurboTax, and I'm not endorsing TurboTax by any means, but there just happened to be one of the tax filing software. Once again, when they ask about educational expenses, it will come to the, you can write off a very similar, there'll be a statement on the amount of money that you will be able to input. Just follow the guide in TurboTax or TaxSlayer, whatever software you use, to input from the form 1098-T. The 1098-T is, and it's T, which stands for the tuition statement, right? And again, it's from eligible educational institutions, and you can claim a credit. So let me talk really quickly about what the difference between a credit and a deduction is. A credit actually allows you to get money back. A deduction just reduces the amount of taxes you owe to the government, okay? And the reason I wanted to specifically talk about what a credit is, I like credits more because a credit means I can actually get a check back from the government. A deduction just means they will reduce the amount of taxes I owe, but it doesn't necessarily mean the government will write me dollar for dollar that amount back in a form of a check. So it's really important that we understand what a credit is versus what a deduction is, okay? So that goes to tip number 4, which is understanding all the ways to reduce your income for your taxes, okay? And this is a really important tip because so many people work from home in this economy now. So making sure you claim your home office, that's a deduction from your taxes, right? So that's tip number 4. If you're working from home and you use part of your home for your office, you should claim that on your taxes, okay? Tip number 5 that I want to go into is understanding, by the way, if you're married, what your student loan, especially if you're married and you're both on income-driven repayment plans, there is a tax implication of filing joint versus filing separate. This is another tax tip. If you're married filing joint, then the government will consider each of your incomes towards your individual. Let's say I'm married to my spouse, we're filing joint. His income is going to be considered for my student loan payment, and my income will consider for his student loan payment, okay? So if you make about equal income and you have about equal student loan payments, that's fine. But if one spouse has a lot of income and very few student loans, and I have less income with more student loans, I don't really want them to consider his income to pay my student loan. So understand how you file your taxes, whether it's filing joint or filing separate, will impact how much you pay in your student loan payment, okay? So here at LoanSense, we do have a marriage tax filing calculator to help married couples understand, is it better to consider filing joint or filing separate? What's going to be the impact on the payment? And ultimately, filing separate might have more of a tax penalty, but is that penalty going to be offset by the amount of payments you have to pay? So understanding that's really important. This video isn't a whole breakdown of that, so I'm not going to go into all the details. Just know that we do have a calculator. We can help with that at myloansense.com. You literally sign up, start an account. But the tax tip number 5 is just know the way you file your taxes, if you're married, does impact how you pay, how much you pay on your student loan. And so that can yield a savings if you understand which to file, married filing joint or married filing separate. Married filed separate, by the way, does also impact tip 1, which is your student loan deduction. Also, I just want to mention that really quickly. You can't claim the student loan deduction, interest deduction if you file separate, apparently. Also, if you are claimed as a dependent on someone else's taxes, you also can't claim the student loan interest. So just know a couple of those factors as well. I know I didn't go over it on this Form T. It is actually on, I could bring this up so you know that this is a credible source. These are some of the rules right here on the IRS website. It's irs.gov. It states it here. If you're legally obligated to pay, okay, so these are the requirements, right? You can claim the deduction if all the following apply. You paid interest on a qualifying student loan in tax year 2022, because this is for last year's taxes. You're legally obligated to pay interest on a qualifying student loan. Your filing status isn't married, filing separate. Again, that's what I said. If you file separate, you don't qualify for this interest deduction. Your modified adjusted gross income, which is what MAGI stands for, is less than the specified amount, which I told you. You have to earn under $86,000 if you're filing single, and if you're married, you have to earn under $175,000 if you're filing joint. Okay. And neither you or your spouse, if filing jointly, can be claimed on someone else's taxes. So let's say your parents still claim you for whatever reason, then you cannot claim this interest deduction. So I just want to go through all that as I talk about tip number 5, understanding marriage implications on your taxes. So I went through and talked about home office deduction, skip back to student loans. I know I'm kind of all over the place today. I want to talk about other ways to get some tax credits and write-offs, okay? So if you own your home, because we help a lot of people become homeowners, tip number 6 is understanding what renovations you can make to your house that will get you tax credits. So, and I'm doing this currently myself as well. Putting in new windows, you get a 30% tax credit for that. So let's say it costs you $10,000 to put in new windows, 3,333 of that can now be credited back to you, which again, a credit is different than a deduction. A credit literally means if you owe less taxes because you've already paid throughout your paycheck, let's say you owe $2,000 and you get this $3,000 credit, then the government literally writes you a check for $1,000. Pretty exciting, right? Anything that helps with renewable energy, there's a 30%. So things like windows, you could do in 2022 or even this tax year, right? You could put in, let's say, put in half new windows, and then next year put in the other half. You can claim 30% of each of those years. And then there's systems like solar energy, like solar panels, that you can only claim the lifetime of your home once in the lifetime. So just understanding what kind of renovations you can do on your home that will get you tax credits. Oh, look, I have a Airbnb guest dog visiting. Look. Just ran over. His name is Zippy. Hi, Zippy. Oh, hi, Zippy. Oh, you're so sweet. Okay. I'm in the middle of filming a video, but thanks for the visit. I love pups. Okay. The following tax, I'm reading this USA Today on the 18 legal secrets on reducing your taxes. I'm only going to talk about the ones that I know impact a lot of our borrowers. I'm not going to talk about all the ones in this article. Tax tip number 7, really important. Everything you could do to reduce your adjusted gross income, like saving into a health savings account, saving more for retirement, employer sponsored, especially if there's a match, save that total match, save more if there's tax accounts like child dependent savings accounts, like if you have a child and you save for their daycare and that's pre-tax, that's also really, really good because it will help reduce your adjusted gross income. And so you end up paying less taxes. And also what is also great if you're student loan borrowers, you end up paying a lower student loan payment if you are on an income-driven plan. So it helps you not just save for retirement, but it actually also helps you get more loan forgiveness. That is gold right there. So I want to talk about that as well. Well, if you have any side hustles, like let's say you work full-time, But let's say you decorate cakes on the weekend, or I'm just making up some random. I've been getting a lot of cake decorating TikToks. That's what came to mind. That's why it came to mind just now. But let's say, or you help your aunt manage her properties and she pays you a little to do that. If you have any business expenses, you can reduce your taxes by claiming business deductions. So that's another one. I'm not saying claim illegitimate deductions, but if you do have a side hustle and that's a business, there are potential for deductions. I already talked about the home office. That's big because so many people have a home office. So there's a deduction possibility. Again, I'm not an accountant. Just want to remind you, I'm just going through some pro tips that I use myself, guided through TurboTax. I don't know about renting out your home for business meetings. I don't know about that. I don't know how easy that actually is, but it just stated here, writing off business expenses while on your vacation. So for example, this is a legitimate example. I'm not saying go on vacation and just write it off, but like our company had a retreat. So everybody came to Florida at the end of January. Some people came ahead of the retreat for the weekend, so they turned it into a family vacation, but it was also considered a business trip. So anything that was not reimbursed through the company, they can claim as a business expense, especially if they have a side hustle, right? So that's a tip. Getting credit. Here's another thing, credit for higher education. So I talked a little bit about the 1098T. Well, higher education can actually grant a credit, and since it's a credit, the amount is deducted from whatever tax you might owe to the government. If it exceeds the amount of taxes, you can get up to a $1,000 refund. So let's say you want to learn, you want to learn how to code, and you had to pay $2,500 for a coding camp or whatever, or a course. I'm just using that as a random example. You can get up to a $1,000 refund. That's really, really good to know as well. Itemizing of course, what's big is the earned income tax credit, which they're talking about 2021 amounts. I have to look it up, but basically it's calculated on a formula just similar to student loans too. And if your income ranges, and this amount probably went up. This is from 2021, so I apologize. I don't have that amount here, but you could look that up. What is the earned income tax credit income cutoff? So it's around 20-something thousand if you're single, and if you have children married jointly with 3 or more kids, then it's probably around 60. I don't know the exact amount. We could look that up. And then, of course, itemizing, deducting private mortgage insurance if you're a homeowner, and really deducting any type of sales taxes, but also keeping in mind that the standard deduction for a lot of people may actually be greater than itemizing all these items, but just being aware that it exists so that you can compare standard deduction better for you versus an itemized deduction, right? So just going through some of those tips, and then local tax breaks. I mean, obviously, local governments have tax breaks, especially for things like if you install new windows, solar energy. Every state's different. So just understanding what your local tax breaks may be, because especially if you're a homeowner and you pay property taxes, there's ways to get different breaks and different incentive programs there as well. So I know I went through all those and I didn't name them, tip number 7, tip number 8. I just kind of wanted to go through some of that to share what U.S. News had to share in terms of tax savings as well, because I know it's tax season and it's a super stressful time, but I promise you, one of my big tips, I want to end with one of my big tips. If you keep a budget and either keep a budget and itemize your expense month by month, or you have one account to manage all your business expenses. Like, for example, my Airbnb is managed under one specific bank account, then I know everything from that bank account and a specific credit card, all are business expenses, because I only run all business expenses through one card. Then it makes it really, really easy, because I can just go to my bank and credit card statement and have them. Usually a lot of banks nowadays and credit cards you can run a report. And so you can run a report and be like, okay, this I paid towards house repairs. This I paid towards, because you can itemize the statements and get like this pie chart. And that really helps when it comes to tax time as well. If you do it by month or have a designated account, that will really help manage any type of expenses. And of course, by the way, right now you can contribute to a Roth IRA. This is my final, I'll make this tip 8. I made all those tips I just gave, tip 7. Tip 8 is you can contribute to a Roth IRA right now, as long as you do it before tax day. You can claim it as your 2022 contribution. And by putting into your Roth, it's up to $6,500, I believe, or that might be for this year. Let me look it up. It's between $6,000 to $6,500. That is also really good because that will allow you to increase your retirement savings. And if you pay taxes on it this year, because it's your income, presumably you already have, it can grow tax-free. So if you have a few $100s sitting around, and just know that contributing to your Roth IRA for 2022 is still possible, and it will grow tax-free. I really recommend that route, especially for people who, if your employer does not provide a retirement vehicle for you, I really, really recommend you do that every single year. And as of late, that amount they're letting us contribute has gone up a little. In prior years, it was like $5,000, $5,500, some range like that. And now it's like $6,000, $6,500. So if you're over 55, it's a higher amount. And those are some of my tax pro tips for student loan borrowers. I hope that was really helpful. Do not be greedy with this information. Please share it with anybody you believe it would be helpful. And again, this content came because somebody suggested it and commented on the channel. So if there is any information you believe would be helpful, please do not be afraid to comment, and I will make a video on it. And especially if it's something I've experienced researching for myself, I would love to share it. And I cannot wait to answer your questions. So again, if you have student loans and you have a bunch of questions, not necessarily about taxes, but about student loans in general, we are here at myloansense.com, and we're on standby to help. So please share, please like, please subscribe. If you like this content, please do like it. I really thank you for your support, and have a great rest of the week.